It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. A global stock rout deepens in Asia, led by losses in Japan and Taiwan. US futures also pointing sharply lower on worries that the Fed has fumbled a soft landing. Treasuries and the yen rallying in the haven rush. Traders betting the US central bank will now need to cut rates aggressively to fend off recession. Plus, inside Adani, Bloomberg gains unprecedented access to the leaders of the Indian conglomerate as it cements a succession plan and battles fallout from the Hindenburg short seller attack. A week of special coverage begins as we hear exclusively from the group's billionaire chairman and founder, Gautam Adani.
In fact, basically these Hindenburg issues of this last year was a Adani Group history is the highest performance.
All right, time to check in on markets, and we're seeing selling in pretty much everything at the moment. Avril Hong's got a closer look. Avril.
Yeah, Paul, looks pretty much like capitulation. There is a lot of panic in the markets. We're seeing traders reacting to the U.S. jobs report, those concerns of a greater than expected downshift in the American economy and the ramping up of the Federal Reserve's rate cut bets. We're also seeing the Japanese equities really bearing the brunt of the selling today, 20% off from the peaks we saw in July. And if you wonder how much further there is on selling, consider the pandemic extremes where they lost about 30%. So might be further room for these declines. Amid all this, the yen, the yuan, they are rallying as the carry trade gets unwound. Let's flip the board, take a closer look at what we're seeing as this stock sell-off accelerates. The bonds are rallying across the curve. Take a look at what we're seeing in Japan. Circuit breakers on JGB futures triggered earlier today. The gains also moderating on US treasuries, but there's also a bit of safe haven buying given the concerns surrounding Iran potential retaliatory action on Israel. A lot going on today, Paul.
Yes, there certainly is. Avril's going to stick with us as we get more perspective with our next guest. Joining us now is in our Singapore studio, Simon Reeve, founder of Tower of Trading. And Simon, as Avril mentioned, a day like this is kind of hard to know where to start, but let's start in Japan, where we're seeing some of the heaviest selling 3 days straight now. Where's the floor here? At what point do you say this market's looking oversold and maybe it's time to pick up some bargains?
Look, I think there's clearly a massive unwind going on here. We've seen three particularly crowded trades. That's long stocks, short volatility and short yen all being unwound at the same time. And positioning in July in many of these trades were sort of at the 100th percentile. So I don't think this gets unwound in a matter of days or a week. I think it could take several weeks before we see any plausible lasting lows in these markets.
To your point about how this de-risking is happening across assets, it's hard to tell where it's coming from. But when you look at the yen, you say it's going to be a couple of weeks for everything to be maybe settling down and priced in. How much further do you see on the yen rally exactly?
Look, I think the yen rally, it doesn't necessarily move in a straight line, but it wouldn't surprise me if dollar yen gets down to $1.25 before the move is over. Now, I'm not saying it gets straight there. It'll be a jagged path. But yeah, I think there's potentially plenty more strength in the yen versus the dollar and yen crosses.
What's your sense of whether Japanese equities, that pullback we're seeing in the next couple of weeks, are there pockets that will be a bit more resilient, perhaps the smaller, more domestic-oriented kind of names in Japan? Yeah,
I mean, they would be sort of the obvious choices, the ones that are less exposed to the massive repricing we've seen in the yen. Banks are probably a sector to avoid at the moment, given the flattening that we've seen in the yield curve. We've seen an aggressive flattening in the 210s JGB curve. And obviously the market is pricing in potentially further hikes and seeing that as depressing growth and inflation.
Simon, what does this mean for the Bank of Japan? Because before all this selling started, they signalled a willingness to tighten further heading into the second half of this year. Is that now on hold, or does all this blow over before then?
Yeah, look, it's a really good question, because they clearly left the door open to further hikes. But, you know, they'll be watching the 20% drawdown in the Nikkei. They won't be oblivious to that fact. And I think they'll be very pragmatic and very cautious. That's typically how they've behaved in the past. So I don't think they'll be in any hurry to hike again, particularly if there's still bleeding in the equity market.
What about the Fed? Do you think they'll be in a hurry to cut? You still think it's going to be 25 basis points in September?
Yeah, I think so. People talk a lot about the Fed put, and you know, when we see some wobbles in the S&P, you know, the Fed will be spurred into action. Just to put things into perspective, the S&P 500 is still up 13% year to date. We're only down 5.7% from the all-time high. So I think the Fed put is considerably lower than where we are now. You know, we probably need to see a 15% pullback in stocks. What could spur the Fed into more rapid action would be if we saw some real wobbles in the credit markets. Now, we did see credit spreads start to widen on Friday, but nothing too alarming. I think the key question for credit investors and really all investors now is, we're in a growth scare. Does this growth scare metamorphosize into a recession?
Yeah, this is a good time to put our question of the day to you, because we have some traders considering that 50 basis points might be a possibility at the next Fed meeting. So are those traders right to bet on an outsized Fed rate cut?
Well, we heard from Powell on Wednesday, and he pretty much discounted the idea of a 50 basis point cut. Now, obviously, we've seen some wobbles since Wednesday, right? So maybe that changes his thinking. But to the Fed's credit, they've steadfastly ignored the market's cries for rate cuts throughout this cycle. The market has always been far more aggressive at pricing rate cuts than what the Fed has actually delivered. And like I said, I think unless we really do start to see credit spreads widen significantly from here, the Fed's likely to stick to the plan and deliver 25 in September.
The problem is, Simon, there are a couple of other economic indicators between now and September that could shift the calculus for the Federal Reserve. So what can come in to kind of calm markets in the meantime?
We've got ISM this week, services ISM. Even if that surprises to the upside, I don't think it's going to be nearly enough to soothe the market's concerns about a growth scare. And when we look at kind of a broad raft of economic data that we've had over the past 12 months, we've just seen a slow and steady deterioration. And what we've seen last week is a massive shift in market sentiment, where previously bad news is good news, right? Because it ushers in the promise of Fed rate cuts. Whereas now bad news is bad news again, with bad news clearly creating recessionary concerns.
So is it time to, kind of pile into bonds? What's the concern behind chasing what we're seeing in the rally as well?
Yeah, I don't think I'd be piling into bonds Monday morning. They're already looking pretty stretched to the upside. But I think in bonds we are in a buy the dip environment, whereas I don't think we are in equities right now. You would only want to buy the dip in equities if you're very nimble and you really know what you're doing. I think there's further downside before we see a more lasting low.
Well, there's a lot of people out there today who will be trying to make money in this environment. How do you do it? Where do you put money to work right now?
Yeah, look, today, I'm flat. I'm sitting on cash. What I would be looking for is signs of a tradable low in stocks. Looking for a very short-term bounce. But honestly, I think the easier money will be made selling rallies rather than buying dips in stocks. And in the bond world, like I said, I'd be looking for a dip. I don't want to chase the rally. They're already looking stretched to the upside. But I think bonds are likely to outperform stocks from here until the end of the year.
What about when you look at some of the demand concerns out of China? How is that weighing into what we're seeing across assets today as well?
What's interesting in China is that they really look like they're getting on the front foot regarding stimulus, fiscal stimulus. So if we do start to see a re-acceleration in China, just as the Fed embarks on a rate-cutting course, that could cause problems for inflation again. So yeah, that's going to be an interesting one to watch over the coming months.
So many different drivers today. It's hard to pick which one. But Simon, thank you for coming in and weighing in on a bit of this. Tao of Trading founder Simon Ree. Paul?
All right, you can also turn to your Bloomberg for more on the market sell-off. Go to TLive Go, that's TLIV Go, on your Bloomberg terminal to get commentary and analysis from Bloomberg's expert editors. Still to come, our exclusive interview with billionaire Gautam Adani as we begin a week of special coverage on his business and his succession plans, with unprecedented access to the Adani Group and its next generation of leaders. This is Bloomberg. Today we begin special coverage of one of India's biggest and most controversial business groups in an exclusive interview with its billionaire founder Gautam Adani. He reveals how he's putting in motion one of the world's largest and most challenging succession plans, and that's even as the Adani Group continues to face fallout from the short seller report that last year wiped $150 billion from its value. Adani also dismisses allegations that the conglomerate's dominance in key sectors of India's economy is due to his relationship with the Modi government.
It's been a volatile few years for Gautam Adani. The Indian billionaire has built the Adani Group into a sprawling conglomerate that controls large and critical infrastructure projects in one of the world's fastest-growing economies. While it's made Adani one of the world's richest people, it's also attracted accusations of cronyism over his close ties to Prime Minister Narendra Modi, as well as questions about corporate governance. In January 2023, those concerns erupted onto the global stage when short seller Hindenburg Research accused the Adani Group of fraud and stock price manipulation. Though they denied those allegations, the report still triggered a $150 billion meltdown in shares of the group's listed firms and cast a shadow over the company, just as it was eyeing a wider global play. The stocks have since then pared most losses, and the Adanis have tied up fresh lines of bank and equity financing and won a reprieve from India's Supreme Court. But fears linger as investigations by India's market regulator and the U.S. Department of Justice continue. It's with this backdrop that the 62-year-old founder spoke to Bloomberg's Anto Antony to say he's setting in motion a succession plan that will hand the running of his massive conglomerate in about 8 years to the next generation of his family, which he dubs the G2. Adani limited on-camera questions to succession. We asked him about the impact the short seller report and its aftermath had on this transition plan.
Mr. Adani, you said that the succession plan was conceived about 10 years back. Now the last 2 years incidents, the investigations, the Hindenburg report, has it affected it in any way, the implementation?
In hindsight, I can say that it is this incident makes family more together and work very hard to fight it back. And I definitely basically see that they have converted this incident into the great opportunity for family uniteness. Secondly, they work hard, and whatever corrections in each and every aspect of our businesses we have to do. And in fact, basically these Hindenburg issues of this last year was a Adani Group history is the highest performance.
Many people attribute your business growth to how you strategize your company's priorities to that of the government's priorities, whether it is state or center. Is that something that you will ask the next generation to continue?
No, so that is basically group has decided, irrespective of the government. Okay, when whatever the government basically decide the priority for the nation's point of view, we always basically focus our business in that direction. And I strongly believe that when you basically business directions towards government priorities, you always basically get the tailwinds and not the headwinds. And that helps your group to grow faster.
That strategy has meant the Adanis now control big chunks of India's infrastructure, including ports, airports, and data centers. So the decision on how the Adani Group will be managed in the future will have ramifications beyond the conglomerate and the family.
Tell us about your succession plans. What steps are you putting in place to ensure that this goes on smoothly for the investors, the family, as well as the company?
Succession is a very, very important for the business sustainability. And it must be organic, gradual, and a very systematic. Succession is not one of the events, but it is a long-term journey. And my plan of succession started almost a decade ago. And I gradually inducted our G2, Pranav, Karan, Sagar, and now Jeet. And the successions will be completed according to my planning in next 8 to 10 years. And all the G2 members of our family were given the best of the professionals' educations. They were also trained in the fundamentals of each and every businesses. They started as interns with our professional CEOs, and gradually they evolved into the leadership roles. Today, all of them looking after the different businesses, and I'm very satisfied with their progress. I'm really proud that all four of them are very, very hardworking and very grounded, and they enjoy their work, and most importantly, they're all still hungry, which is not very common among second generation entrepreneurs.
What systems are you putting in place to make sure that the group continues to grow without any internal conflicts?
These integrations will never happen in the Adani Group. When I gave the G2 the options of independent businesses, they decided collectively that they want multiple businesses but one family. So they have a strong unity among themselves. The succession is all about both continuity and change, and it is a gradual process. This will ensure that the succession is seamless, is a smooth, and a sustainable. The structural succession plan is supported by a strong cultural values. Our values provide the glue that holds together our arrangement.
And once the transition is complete and once you have more time at hand, what would be your plans?
Ultimately we will retire and be more relaxed.
That's Adani Group Chairman Gautam Adani speaking exclusively with our South Asia editor Anto Antony. And Anto joins us now for more from Mumbai. So Anto, some impressive access you got there to Gautam Adani, but some topics apparently off limits there. What were your key takeaways?
Yeah, we got unprecedented access to Gautam Adani and his family. So we spent almost a dozen days visiting all their assets, spending time with their key executives and so on. So this is, as you know, this is one of the largest wealth transfers which is underway globally. And Gautam Adani is overseeing it. As of now, he's 62, and by the time he turns 70, he plans to hand over the entire empire to his sons, that is his two sons, which is Karan and Jeet, and his nephews Pranav and Sagar. So how quickly, he's overseeing that transition is what he explained to us in detail. My another key takeaway is that one thing that I learned is that once Gautam Adani stepped aside, the group is looking at a more balanced and measured growth, and one key focus is going to be risk mitigation, so that those days of unbridled growth may be over for the Adani Group. They will be looking at more measured growth going ahead as the succession happens.
So Gautam Adani talking there about what he calls the G2, that tight circle of family, the strong bonds, the cohesion that's there. But how about some of the other stakeholders in the Adani group, for example, the board and others? How will they feel about these succession plans?
So he started this succession plan in 2018, and he's spending a good 15 to 16 years to see it through. So we will see the entire management or control transferring from Gautam Adani and his two brothers to the four sons over a 15 to 16 year time period, during which the first generation is closely overseeing that transition. That gives a lot of comfort to investors, the board, and the employees of the group as such, because the first generation is there to oversee and correct any mistakes that the second generation is doing. And succession being a taboo topic in many of the Asian families, we never see this kind of a planned and well-structured transition. That is what is giving a lot of comfort to the board and investors.
All right, our South Asia editor, Anto Anthony, there in Mumbai, talking about his experiences interviewing the Adanis, and we're going to have more on the Adanis later this hour as we continue to dig into the succession plan, business outlook as well. Singapore Management University's Nirmala Kumar will be joining us for a conversation about that. And our coverage culminates with a special report on Friday, 11:30 a.m. Hong Kong time, with an encore presentation at 7 p.m. And if you're watching in Mumbai, that's 4:30 p.m. All right, here's a look at global market movers. There sure are a lot of them today, and a tremendous amount of red on the screen as well. We've got the Nikkei, of course, one of the hardest hit. I'll talk a bit more about that in a moment. But Taiwan's TAIEX index off by 6.85% at the moment. So tech getting hit pretty hard in the selling. In terms of the foreign currency front, the renminbi is having a very good day. We've got the offshore yuan, the strongest level we've seen so far this year. A fair bit of action in the bond space as well. And of particular interest is the 2s, 10s, the spread there between the US 2-year and the US 10-year, now down to, let's see, just 8 points. So that inversion getting closer to ending. Let's take a closer look at what's going on in Japan. Meanwhile, we did, of course, have the topics paused for about 10 minutes in a circuit breaker, but trading has resumed, now off by 5.7%. The Nikkei and the topics both down now about 17% on month. The yen continuing to strengthen, just below 145 at the moment. Not much is safe today. Let's take a look at crypto assets. Cryptocurrencies getting pretty hard hit as well. Bitcoin at one point was down more than 10%. Second ranked Ether having its steepest fall since 2021. So the global sell-off taking no prisoners. Still to come, Rystad Energy sharing their outlook on the natural gas market amid heightened geopolitical tensions.
Bond markets has been reflecting people's fear about the recession. From my view, I also would agree if Fed should employ a rate cut. I would expect one or two more cuts in November and December.
The pressure is growing, especially from what we see in the labor market. But however, whether this really overplayed by the market, I think this is also one of the questions that we have in mind, because if we look at the services sector in the US, it's actually not as worse as it looks on the surface.
We've got ISM this week, services ISM. Even if that surprises to the upside, I don't think it's going to be nearly enough to soothe the market's concerns about a growth scare.
I am just hoping we don't see that crack widen tonight, because if it does, any chance of the I guess the reaction we've seen starting to calm down pretty much all goes out of the window, and it does accelerate, and all of a sudden a 50 basis point optional rate hike looks more like a necessity.
Our guests reacting to the market rout in Asia, weighing in on the Fed's rate path as well. And we've got Japan coming back from the lunch break, and yep, the selling is resuming. We now have the Nikkei off 5.25%. That was off 4.63% when they went to lunch. The Topix sliding again, now off 6.2%. Before the break, they were at 5.73%, and pretty much every sector getting hammered. I mean, you'd think that an era of increasing rates in Japan might be good for financials. Nope, they're down too. We've got these markets seeing their steepest declines since the Fukushima meltdown back in 2011. The yen there now below 145 against the dollar, and we got the 10-year yield slipping in Japan as well. That's now down at its lowest since May. Well, let's get some more on the market sell-off in Japan with equity benchmarks coming back online. Let's get to our Asia equities reporter, Winnie Su. So, Winnie, does this sell-off signal the big rally in Japanese stocks is over? Is it done?
Yes, unfortunately, in the short term, we are seeing a lot of headwinds for Japanese stocks. And even after this big sell-off, people are saying that we might still see more of the sell-off to come, especially when you think about what are the drivers that have been driving this trend. You have the worries around the U.S. economic slowdown and also the hawkish Bank of Japan. So really, the key thing here is the appreciation of the yen and also the volatility of the currency. That's really weighing on the Japanese stocks. So as long as we are still seeing this trend in currency to continue and seeing more unwinding of the carry trades, that is still likely to still lead to the yen to go stronger and the Japanese stocks to go lower. You know, we talked to strategists this morning. People are worried. People are saying that this looks like a free fall, like a tsunami in the Japanese market, and some are expecting the yen to reach the level of 140 against the dollar sooner than expected. That would likely to weigh on Japanese stocks, and where Mizuho told us that we might see another 2 to 5% of the drop in the stock market.
Yeah, we're certainly reaching for the superlatives today, and one gets the sense that a bit of panic has gripped the market at the moment, but things will settle down. I mean, long term, what is the outlook for Japan?
Yes, so while we're seeing some investors pairing their forecast for topics in the Nikkei towards year-end due to the current trend that we're seeing, most long-term investors are still relatively bullish on Japanese stocks. BlackRock is still is still overweight on Japanese stocks, and they're citing, the fundamentals remain strong. Some investors still see the low valuation of Japanese stocks being quite attractive, and along with some of the structural factors with the wage growth and also Japanese companies' pricing power, those are still likely to remain. So SocGen the other day mentioned that this sell-off is likely driven more by the flow instead of the fundamentals. Goldman also say that once this sell-off is out of the way, people are likely to continue to shift back to fundamentals and valuations.
All right, Asia equities reporter Winnie Su there in Tokyo. Let's have a check-in on how commodities are doing. Avril's keeping an eye on that space. Avril.
Yeah, Paul, specifically Brent crude. I mean, we saw it earlier today firming above $77 a barrel. And this is really against the backdrop of those concerns surrounding Iran and Israel. But the demand side of the equation, I think, is really the major driver. The risk coming through, especially given this risk of mood in the region, but also what we're seeing on these U.S. jobs numbers. So we're seeing actually Brent crude hovering near these 7-month lows, despite a bit of an uptick now. We have Saudi Arabia raising its flagship crude prices to Asia. This is the first time it's doing so in 3 months. And this, in some ways, I think reflects the confidence behind where it sees demand in the region. But for the US and Europe, there were actually significant cuts. Natural gas futures also declining. Paul.
All right, Avril's sticking around, and joining us now in our Singapore studio is Emily McLean, Vice President, Head of North America Gas and LNG Market Research at Rystad Energy. Emily, obviously a lot of what we see happen in this space is very sensitive to geopolitics, not just the Middle East, but the situation in Ukraine as well. In that respect, can you see potential for these conflicts to get worse before they get better, and what sort of impact is that going to have on the market?
Thank you for having me, Paul. It's a great question, and I really can't comment on the outcome here in the short term, but what I can say is that we do see the geopolitical tensions of today, the regulatory and the environmental hurdles within the gas and LNG market really having a lot of evolution, and that has really created uncertainty in the market. As a result of that, it's been difficult to really hone in on short-term pricing in gas and LNG in the domestic markets as well as global markets.
What exactly are you seeing in terms of activity levels, the knock-on effects for Asia?
It's a great question as well. So I think of this from the North America perspective and the contributions that North America has been providing in terms of LNG to international markets. Asia is the primary demand driver long-term for growth in gas and LNG, and we expect that will really begin to be realized in the medium term here. So over the next 5-6 years, we'll see an uplift in demand.
We also saw, I think, U.S. LNG exports hitting 3-month lows in July. When you look at the supply picture, do you see there being the risk from all this infrastructure being concentrated, reliant on what we're seeing on the Gulf Coast?
Absolutely. So that risk is not unknown to market participants. There's absolutely a lot of exposure or vulnerability to Gulf Coast markets because of their proximity and their location. Being in a very weather-driven region with risks associated to extreme weather events. Historically, we've seen facilities, even this year, we've seen facilities experience outages due to weather. So that will continue going forward. These LNG facilities in particular, and the infrastructure and the operators consider this when building and designing the projects. But the reality is that you can only do so much to prevent damage or outages, and that will affect the volatility within the market.
So with that backdrop, what are you looking at in terms of the U.S. election? Because Biden did extend a pause on new projects earlier in the year, but we could see potentially a Kamala presidency. Do you think that's going to extend the pause even further, potentially?
Another great question, and this is on the top of every market participant's mind. What does the future of the election outcome look like for global energy markets, domestic energy markets in the U.S.? There are certainly, differences between a Trump or a Harris if, either of those are elected in this year. When it comes to the pause in particular, there's still, a lot of difficulty in assessing what that's actually going to look like and when that pause may be lifted. We believe that the pause will be lifted next year, whether that's early this coming year or, a few months down the road. It's a positive for gas and LNG industries. It's a sign or signal that we need to see this gas and LNG long term. And so that lift really will help to not just buoy the gas and LNG market, but buoy the energy and the economic landscape within the U.S.
So let's assume that the pause is lifted, that there are some other headwinds as well, particularly in terms of rising costs, tight workforces also. Can you give us a sense of the sorts of headwinds that they pose to new projects?
Absolutely. So we've done a look-back analysis on the cost of inflation, or the inflation, and the effects on costs and labor, and that's roughly 17 to 33% growth between 2022 and 2024. So we're talking really substantial elevation or inflation in terms of pricing associated with these facilities. EPCs and the contractors around the LNG development recognize this. They're in the mix of it, right? So there is a risk there going forward with these planned projects, what that could potentially mean to timelines of facilities. But we're optimistic in that projects that have to come on in order to meet global LNG demand in the short and long term, we'll have to, manage these costs. Hopefully, we'll see inflation coming down in the medium term. And then, if we look back over just the past few years, projects were subject to COVID-related inflation, the labor issues at that time, and so hopefully that risk does dissipate with the associated risks from COVID no longer really being part of this current case.
We've been talking about supply a lot. What about the demand side of the equation, especially given the data we've been seeing out of the US, particularly the manufacturing, the jobs sector? What are you expecting the demand to look like?
It's a great question as well. So thinking of this from gas and LNG in that perspective, in July, we saw the greatest or record high levels of gas for power generation. Gas for power is the primary consumption or generation in terms of U.S. consumption. That's as a result of coal retirements over time. So we've seen the U.S. pulling away from coal facilities. That's enabled natural gas to step in and take greater share of the power mix. We expect demand will continue to increase. There are other, energy sources that will be tapping into the existing grid through AI data centers, EVs. All of that's contributing to this top line for demand, domestic demand, in addition to the LNG export demand.
And globally, what do you see as the supply-demand balance, and how is that going to influence prices, you think?
Yeah, so globally in the short term, we see it doesn't quite feel it because of the pricing today and the muted or, tempered markets, but the reality is there is a limited amount of LNG supply out there. And even with this year and the, to date outages that we've seen, volatility is just in the background, right? So without additional projects and capacity coming online, we can't necessarily mitigate that volatility. It's just that we're fortunate we've had 2 very warm winters, the last winter being the warmest on record, that have helped stabilize the markets. But through the medium term, we will see projects coming on that will add to that total LNG supply and help support prices from a global landscape.
Right, weather in the mix in the short term and then longer term, looking at the infrastructure and what's coming online. Emily, great to chat with you. Thanks so much for sharing your insights on the industry. Emily McLean of Rystad Energy. Paul?
Thank you.
All right, thanks, Avril. Still to come, more of our exclusive coverage of the Adani Group as Chairman Gautam Adani tells us exclusively about his plans for one of the world's largest wealth transfers. We'll have analysis of that up next. This is Bloomberg. All right, let's take a look at how we're setting up in the pre-market in India, opening in 53 seconds or 50 seconds. Looks like it's not going to be immune to the selling either. The Sensex off by about 3% right now. There was a feeling maybe India could be a safe harbour in this storm. It hasn't been all bad across the region. We do actually have the CSI 300 in China better by 0.25%, but no, looks like India is going to suffer the same fate as the rest of Asia when we get going. All right, let's get back to our exclusive now on the Adani family succession plan as the group continues to face fallout from the Hindenburg Research short seller report. Billionaire founder Gautam Adani telling us he'll shift control to his 4 chosen heirs by early in the next decade.
My plan of succession started almost a decade ago, and I gradually inducted our G2, Pranav, Karan, Sagar, and now Jeet. And the successions will be completed according to my planning in next 8 to 10 years. And they enjoy their work, and most importantly, they're all still hungry, which is not very common among second-generation entrepreneurs.
Let's bring in Nirmalya Kumar, professor at Singapore Management University, where he focuses on corporate governance, auditing and risk management in India. Nirmalya, I just want to get your feeling about what some of the most important elements are when you're ensuring smooth transition in a conglomerate the size of Adani Group.
Well, the biggest challenge always is, do you have a clear succession plan? And despite whatever people say, having a clear succession plan is not an easy task because you are trying to divide a very large conglomerate between several competing inheritors. And the best of people like Rahul Bajaj of India, they do it by making sure that each of the inheritors knows exactly what they're going to get and is managing that prior to the death of the retirement of the promoter. But in most cases, what happens is that you leave without a proper succession plan, and then the different inheritors are fighting with each other as to who's going to get what. Now, this split can be acrimonious, like it was with Anil and Mukesh Ambani, or it can be relatively amicable, as it was with Sanjeev and Harsh Goenka of the RPG group. I think what Gautam Adani is trying to achieve, because there are three brothers and they all have children, is he's trying to achieve that by saying, okay, each son or each inheritor gets one part of the business to manage today, and hopefully that will be the succession planning. But remember, these different businesses that are divided between the inheritors are never of equal value. So there has to be some horse trading at the end of the process.
In our interview with Gautam Adani, he was emphasizing quite strongly the long period of time that he's taken to put this together, that he won't be seizing control for a few years yet, and he even calls the group the G2, and that they've been involved in the consultation process as well. So how much confidence do you have that Adani's succession plan is going to avoid some of those pitfalls you described?
So given what he has said, I would have to say that in my experience, relative to most promoters, at least he's willing to acknowledge that there needs to be a succession plan. At least he's willing to acknowledge that there will be a time when he won't be around. You have to remember, most promoters like Gautam Adani, the problem is that because they are so successful, they feel they're also immortal, and they don't get into succession planning. So one thing that is very encouraging from what I've heard right up to now is that he is actually planning a succession. He is actually having a succession planning and a conversation with the next generation. Now, my point still remains the same, that at the time when the succession happens and he's not around anymore as a firm guiding hand, will the next generation, denigrate into squabbling as the different parts of the organization are not of equal value, or will they have this proper succession plan that they will just simply implement?
Yeah, there is always plenty of space for personal grievance to play a part. But what about on the corporate governance side of things? What could potentially go wrong there?
So besides the lack of a succession planning, in which case if the inheritors start squabbling with each other, then you lose the focus on the performance. Remember, family business research is very clear. With successive generations, unless you have an exceptional entrepreneur like Kumar Birla or Mukesh Ambani, with successive generation, family business performance declines. There is no doubt about that. Partially because the next generation never has the hunger, the entrepreneurial vision, the business acumen that the founder had. They get into wealth preservation rather than wealth maximization. So it is very hard for the next generation, except for these exceptional cases I mentioned, Mukesh Ambani or Kumar Birla, that you find that the same energy, the same enthusiasm, the same performance, the same discipline in the next generation. There is a regression to the mean.
Yes, well, look, also conglomerates are quite unusual in many developed economies, becoming less and less common in the United States, South Korea as well. Why is it that they still continue to perform such an outsized role in India?
So conglomerates are very big in India, and you're completely right that in the rest of the world there's a conglomerate discount which is put on it, because the feeling is that conglomerates do many things, none of them really well. But in India it's slightly different, because firstly 75% of Indian business is family controlled. Families like conglomerate for several reasons. Firstly, it gives them an opportunity to grow, given that they have some preferred access to the bureaucracy and the government, which still looms large in Indian business. So they feel that they can get into other kinds of businesses because of this access that they have. Secondly, conglomerates bring diversification. With diversification comes risk reduction. They bring opportunities for growth. But lastly, and this is related to our previous conversation, because they have several children in these families, and the families are 75% of Indian business, by having a conglomerate, they're able to give each child a certain business to maintain and manage without getting in the way of the other children. So that is why conglomerates are so popular. Two big reasons to summarize. One is number of children in the family, so they have to be given some business to run. And second is the risk diversification that comes, as well as the access to bureaucracy and government gives them an advantage in the new businesses that they start.
Do you think that that is going to continue to be the case in India for much longer? Because the government's been enacting a lot of reforms. Do you imagine conglomerates are going to retain this sort of power in the years to come?
It's interesting. I think actually not only will they maintain power, but it also actually may grow. And the reason for that is very straightforward. Research on Indian companies indicates that those companies that are both listed and part of a conglomerate outperform companies that are just listed but not part of a conglomerate, or conglomerate companies that are just privately held. Because by being listed and being part of a conglomerate, you get two advantages. You get the market discipline that comes from being a listed company, so you don't do all kinds of shenanigans in the companies. Secondly, by being part of a conglomerate, you get the market access and the access to the bureaucrats and the government, which you don't get if you're a standalone listed company. So the research is very clear. Listed companies that are part of conglomerates in India outperform those companies that are either part of a conglomerate and privately held, or listed and not part of a conglomerate.
All right, Nirmalya Kumar, Professor at Singapore Management University, thanks so much for joining us. And our special coverage of the Adani Group continues all week. Tomorrow we're going to ask Gautam Adani's eldest son, Karan, about taking over one of Asia's biggest logistics businesses, and about claims the Adani Group is too close to the Modi government.
Being close to a political party does not necessarily mean that you get the work. You get the work because you are able to deliver.
And our coverage culminates with a special report on Friday, 11:30 a.m. Hong Kong time, with an encore presentation at 7 p.m. That is 4:30 p.m. in Mumbai. Well, we told you a lot about things that are going down today. Let's take a look at something that's going up, and quite aggressively. The Malaysian ringgit surging more than 2%. This is the biggest rise we've seen since 2015. So the ringgit stronger for 11 days in a row now. We've also seen the local benchmark bond yield falling, the share market declining, but the ringgit strengthening quite impressively. Longest daily winning streak now since 2010. This is on optimism around Malaysia's economy and foreign fund inflows. So there you go, not all red. Plenty more to come. This is Bloomberg.